welcome to the Monday Futures Market Outlook for August 26, 2013. This is Patrick Ceresna. As always, we start off with a chart of the euro, and we've now seen the euro consolidate for almost a week. We had a short-term pop that came and fully tested the 134 level, 134.50 area, and we've been consolidating in the zone. There, we obviously have German elections coming up, and we do anticipate that the euro will remain relatively range-bound during that environment. We don't anticipate much more weakness than maybe a couple hundred pips on the downside toward 132, or a temporary pop higher, which would eventually correct itself. Would be a short-term rally that could see 136, 137. We're not trading the euro very actively right now. We're going to wait till the bigger picture catalyst creates a bigger trend move. We do believe that at some stage the euro can deteriorate from this 134 level all the way back down to 128, 127 later this year, but it will more than likely be after the elections. Next here I want to take a look at crude oil, and crude is attempting to break out above the 107 level where its highs came in the month of July. Really at this stage, will crude oil be able to make the break? There is certainly the potential for there to be a short-term spike, and if it does, there is room for us to even see a break above 110 up to even towards 115 on the upside with targets up there. But whether or not oil does make this break, we don't believe that that is a sustained move, and that in the bigger picture oil will likely be lower. And so if we get this technical breakout and you choose to participate, make sure that you have an exit strategy to try to take profits along the way up. Next here I want to take a look at gold, and gold has now legitimately broken above a key overhead resistance at 1350. This is a zone where not only were there a number of short-term bottoms, but some short-term tops all put along there. The fact that gold has made it above there and held is the first sign that the bigger picture bottom in gold may be in. Now there is going to be a point here when we reach this 1400 to 1450 zone where we're in, that there is going to be a corrective phase in gold, which will have a lot of people second guessing whether this is a bullish breakout, and with that pullback may even see $100+ given back during a retracement. But we do believe at this juncture that there's a very good probability that this 1200 low down over here at the end of June is probably the lowest gold will go this year, and that probably at some juncture we do think that gold has room to even go as high as 1500 and 1550 later this fall. But at this juncture the short-term upside is getting limited, and some sort of a step back corrective phase could kick in at any point, but that will most likely lead to a very good buying opportunity. Next year I want to take a look at the 30-year bond, and I marked off the 132 area. Had a good strong reversal day last week that saw some short-term strength come in there, but bonds on the 30-year have yet to do anything technically bullish. We would need to see strength back up to the 134, 135 level up along this zone right in here in order for us to start to see any hints that a short-term bottom is in. We do believe that there is room for these bonds to have a substantial retracement. We may see a trend reversal after tapering has begun. Really at this stage with us now just 1 week before the start of September, we could end up seeing still some range-bound price action this week, and really it would be in the first couple of weeks of September where there could really develop a potential trend reversal. Finally, I want to take a look at the S&P 500, and we have now a short-term low down around the 1630 level. That's a level where we were looking in the 1630s to 1610 area was where we thought the first short-term swing low would develop. Now we're getting that retracement. We believe that this retracement can still progress over the next few days, and even for the remainder of the week back to 1670, 1680 on the upside. But if the bulls fail to have a catalyst and any momentum to drive through these levels, that will most likely lead to a consolidation in price throughout this week in this area and make it vulnerable for yet another leg lower in the markets. If we fail off this level and have a round of selling, we could see a test down in this 1560 to 1580 area down below later this in the next month or two, as the correction will just go a little bit deeper and farther. Ultimately, if that doesn't lead to the beginning of a new bear market, which we don't believe it will, that will probably emerge as a compelling buying opportunity later this year. But at this stage, we remain on the sideline of the markets and anticipate there to be further weakness over the next upcoming weeks. That was your Monday Futures Market Outlook. Thank you for joining me.